Should we buy or sell this infectious diseases ETF? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and commenting. So here are a bunch of healthcare ETFs. We do have the one that gives you exposure to the infectious diseases industry or subsector in the healthcare sector. 13% from the 52-week low, still 22% away from the highs. The ticker for the ETF is GERM, Treatments, Testing, and Advancements ETF. But I just call it the Infectious Diseases ETF. Okay. So here is the chart, long-term data points, the weeklies. I do see here an inverse head and shoulders pattern. A shoulder, a head, and a shoulder. We do have a bit of a second shoulder here. Not super dangerous, but the bulls, they need to rally relatively soon. But all in all, this is a constructive bullish pattern. If you go here to the dailies, we have support at the blue 100-day moving average, which has been important in the past as a support level. It's very much watched the moving average. So all in all, it's nice to see that on Friday we did stop dead on that moving average. If you look here at RSI and the PPOs, we are in a very neutral territory on the weeklies. On the dailies, we have been lower though during some of the previous major pullbacks, like back here in 2022. We did go lower on RSI on the dailies and also lower on the PPOs. So on those indicators, we are not at extreme buy levels. You also have a horizontal support level in play here, which you can see with the red dotted line. So all in all, this looks pretty interesting from a bullish standpoint. So in this case, I write 100 daily moving average support. I give the bulls a 5 here on the technicals. Next, let's look at the seasonality. We don't have enough data to get any kind of reading here to the left, but to the right in the table view. So far, we have a 4% loss for February, which is the biggest loss for February so far. Though we do have the issue with very limited data. March, on average, March has not been a bullish month. Same thing with April. We have to go to June and July to get into months that are clearly bullish. So the issue here is that we have very little data. So I'm not going to give any kind of big points here. I will give a -2 here to the bears. Overall, the data was bearish, but we have very little data though, so not any reason to jump to conclusions. Next, we look at the fundamentals and we compare the GERM ETF with the XLV, which is the Spider, their healthcare ETF. Year to date, 3.48% gain for GERM, almost the same loss for XLV, so outperformance from GERM. Beta 0.48, which is much lower beta than the broader healthcare ETF at 77. That's bullish in the fundamental space. PE 14.21 versus 17.15, also bullish. The yield is 1.06% for GERM, 1.36% for XLV. So the XLV, it gives you better yield, but percentage-wise, it's not really a big difference. Here you can see the holdings, the sector breakdown. Unsurprisingly, a lot of healthcare. Big difference here in market cap. Both are very, very weighted towards USA. So when it comes to the fundamentals here, I do think that they were pretty good. I will give the bulls a 6 here on the fundamentals. Now I am comparing long-term GERM against S&P 500, medical devices ETF, IHI, and the XLV healthcare ETF. We get no calculations on the weeklies. On the dailies, you do see that there is a 80% correlation with S&P 500, 73% with medical devices ETF, and 41% with the healthcare ETF. So the strongest correlation we get is with the S&P 500. So what happens to the SPY is going to have the biggest effect on GERM based on statistical correlations. Here we have the S&P 500. We've seen a bit of a rally here from this inverse head and shoulders pattern, which is, bullish. We did get into some trouble when we approached the blue 100-week moving average, looking at the dailies. Some pullback in development. Maybe the purple 20-day moving average, which will offer support. We also pulled back here from overbought levels on RSI on the dailies. So it was basically expected. Let's quickly look here at the seasonality for the SPY. To the left here, it looks pretty bullish over the last 5 years in green, 7 years in blue, 10 years in red. In the table view, 0.33% gain for February. Looking at the sum, generally speaking, February is a bit of a bullish month. March is more bullish, but you can see that it's more binary when it comes to the actual monthly performance over the years. But overall, it usually works out long term. Okay, so let's now compare some relative performance. The GERM against the SPY. Start here with the weeklies. We have seen substantial underperformance here from GERM. We have reached a low that we saw back in May of 2022, and that was a good time to turn bullish on GERM. GERM began to outperform the S&P into early July. Looking at the dailies, we are at a low level on RSI that usually has a tendency to begin a period of outperformance from GERM. Looking at the seasonality, 4.6%, almost 0.7% underperformance for February so far. So it's one of the worst Februaries. For this pair, March, however, is definitively not a bullish month, so that's a bit of an issue. But then again, we have very little data. So in this case, I do think I will give the bulls a 2 because the signals were a bit mixed. Overall, we end up with 2.8 in favor of the bulls. We are at 100 daily moving average support. So all in all, I think that there's more reasons to be bullish than bearish on this ETF. So we do have some time left. Let's look at the top holdings within the GERM ETF. It's here. Altimmune is the top holding. Certainly fallen a lot from its size. So here's the chart. A bit of an inverse-ish head and shoulders pattern here as well on the dailies. Dipping a bit below the green 50-day moving average. I would ideally like to see it offer some clean support. Arbutus, Biopharma Corporation. Start here with the weeklies. We are at horizontal support here, as you can see with the red dotted line. So that's an interesting level. We do have a bunch of resistance levels above us. The blue 100-week moving average, pretty clear resistance here. When we go here to the dailies, the green 50-day moving average, it's been support back here. Maybe it could offer support again. So how far would we have to go down to have a bit of a visit? Approaching 2%, not too much. So let's look here at the seasonality. Pretty bull. Well, overall it's bullish, but a bit messy. February, 11% loss so far, so a very bad month. March is not bullish though. It's the worst month for this stock. Here you can see the price book ratio. Price to sales is at a very interesting low level. Also, price earnings is relatively low. Let's look at the analyst price targets, forecasts. They are very bullish. Strong buys across the board. So overall, it's an interesting opportunity, but it's interesting. But the technicals they could be better. Adaptive is the next one. This also very substantially corrected from the highs, but that also means value. Here again, we have a horizontal support zone. Interesting, but this is very interesting from a technical perspective. Let me draw it in. Support from the red 200-day moving average, which is a huge deal. This was a resistance level back here, so this is definitively the most interesting from a technical perspective. Seasonality 4% loss so far for February. March is a bit more mixed here, but overall it's not a bullish month. Here are the fundamentals. Low on price book and price to sales, a bit higher on PE. What are the price targets? The forecasts. Yeah, earnings is coming up in the coming 3 days. So that is it's a risk reward thing. A lot of people do not want to like trade earnings, but if you are going to like avoid the big events for a security, then you will never get the big moves either in your favor. The price targets are overall pretty bullish. The average is 47% above us. The minimum is 21% below. Highest is 104% above. The analysts are overall pretty bullish in terms of the stock ratings. So I do think of all those that we've looked at so far, this one is most interesting from like a bullish perspective. Al-Nilam is the next one. Yeah, this one is pretty high. It's pulling back, lost the support level on the dailies. Yeah, dipping below the blue 100-day moving average. That's bearish, but that doesn't mean it necessarily is a shortable one, because RSI has approached the level that it occasionally bounces from, so it's a bit messy. Looking here at the seasonality, could be a bit bullish. In the table view, 5% loss so far, but February usually is a bullish month. March, April usually bearish. Let's look a bit here at the fundamentals. Notwithstanding the recent rally, we are still relatively low in terms of price to sales and pre-E and price to book. Let's look at the forecasts. It's more mixed though. The average price target is only 16% above us. So this one is not, yeah, it doesn't really have the upside is likely limited. So let's measure what 16% would be. So from the current level, it would be, yeah, it would be a breakout, but not much more. BURAD is the next one. Let's very quickly look at it. On the weeklies, resistance from the green 50-week moving average. On the dailies, support from the 200 daily moving average. Seasonality here to the left, potentially a bit bearish into the 13th of March. But March, on average, usually here, well, not on average, but in terms of the sum, usually it works out for the bulls. Let's quickly look here at the price target. Yeah, that's pretty bullish. So the analysts are feeling quite optimistic about BioRed. So yeah, we have looked at the Infectious Diseases ETF, 100 daily moving average support, and the fundamentals especially look pretty promising. We also looked at some of the stocks within the GERM ETF, and it was a mixed bag, but there were also some very interesting opportunities for like those who want to specifically get exposure to a stock. So yeah, I think that all in all, we do have an interesting setup here for this ETF, because there's been such a substantial pullback that, of course, also is reflected in these stocks. This subsector in the healthcare space was obviously a very huge topic during the lockdowns, that pandemic. But the massive correction now could create an artificially low level. So it's all about buying low and selling high. I do think that these kinds of diseases they have definitely not like gone away. So it will be a topic going forward as well. So yeah, I think that these are very interesting times to look for bullish opportunities in this space. So yeah, whatever you do, of course, you do want to use stops and let the trend be your friend.